Hello traders, you are welcome back to the Forex Geek channel, and in this video we're just going to be diving into one of the most straightforward and reliable setups in price action trading. Okay, and to be specific, we're going to be looking at the two-legged pullback master setup. This is a go-to pattern for traders who want a clear structure that they can apply in any market and on any time frame. So you might be wondering what the two-legged pullback is all about. I don't know if you've heard of this concept before, but I am going to explain it in a way that you're going to understand. Okay, basically the two-legged pullback is exactly what it sounds like. It's a price retracement that forms in two distinct waves or legs against the prevailing trend. So if you have a sell trend, for example, and then you have a two waves retracement, all right? If you have a two waves bullish move within a sell trend, you have a two-legged pullback. Okay, it forms in two distinct waves against the prevailing trend. So it is most effective in trending markets where price takes a temporary pause before continuing in the same direction. So let us see if we can find, a very practical example that you can, use as a reference. Just know that it's a simple concept whereby you have double waves forming as a pullback. Unlike the regular, single waves where you have an impulsive move, and a pullback, an impulsive move and a pullback, an impulsive move and a pullback, and so on and so forth. Impulsive move, pullback, impulsive move, pullback, like that and like that. You can see that these are all single waves, right? These are all single waves, but a double waves is going to give you something like, when you have an impulsive move, then you would have if after you have an impulsive move, then you might have something like this as a pullback, right? You might have something like this as a pullback before price comes back in the direction of the trend. Okay, so you have an impulsive move and then you have a pullback, but the pullback does not just end in one move. It has two legs, one, two, right, before it continues the initial trend. Okay, so for want of time, we don't have to start looking for this exact pattern or a similar pattern in the market. Let's just use a diagram, or rather this arrow tool, to explain what it looks like. So just think of it like this: the market pushes in one direction, then it takes a breather and then makes two attempts. It makes two attempts to move in the opposite direction. So this is going to be the first attempt and this is going to be the second attempt, all right, before it resumes the original trend. So those two pullback legs are the signal that we are looking for. Okay, basically this setup works because markets rarely move in straight lines. Even strong trends tend to inhale before they exhale again, right? So the two-legged pullback reflects natural market behavior. The first leg catches early counter trend traders, right? Then the second leg often traps late comers, and then price snaps back in the direction of the main trend. Okay, so this is just an example for a bearish trend. A bullish trend is going to be similar. Perhaps you have something like this and then like this, and then you continue in the direction of the trend. Okay, so just remember that there's going to be two attempts to go against the trend before the initial original direction of the trend prevails. Now, by waiting for both legs to form, we avoid jumping in too early and increase the probability that the next move will follow through. Now, to identify the pattern, you have to start with the main trend direction. Okay, if the market is in an uptrend, for example, you have to be looking for a downward pullback. Okay, so if the market is in an uptrend, you want to be looking for a downward pullback with two legs. Okay, for example, you can see on the Euro USD pair, we can see 1, 2, right? And you can see we even had a bonus. We had a bonus here before the impulsive move, right? And then it continued that way. Okay, so this is an example. All right, so when it is an uptrend, you're looking for downward pullback with two legs. Leg one is the first counter trend move, followed by a small bounce or pause. Okay, then leg two is another move in the same pullback direction, often slightly lower, that is if it's in an uptrend, right? Or slightly higher if it's in a downtrend. Then the second leg is going to confirm the structure. Then you can look for a good opportunity to enter the market in the direction of the trend. Once you have spotted the two legs, the ideal entry is usually just after the second leg shows signs of ending. Make sure that you get a confirmation. It could be a reversal candlestick pattern. If you don't find any confirmation around the second leg, then please do not enter. Make sure you get a confirmation before you get into the trade. So if you don't get a confirmation around here, then check out if there's going to be another leg. Then if you get a confirmation, then you can proceed to entering the trade. For beginners, just keep it simple. Okay, in an uptrend, enter long when the second leg finishes and price starts to move back up. If you get a bullish candlestick pattern, then you can jump into your buy trade. But if it's a downtrend and perhaps you get a bearish candlestick pattern, then you can jump into a sell trade. Your stop loss placement should go just beyond the end of the second leg. Make sure that you get your candlestick pattern so that you can set your stop loss beneath that candlestick pattern. In this particular scenario, we can see that this first leg was valid, right? And then this second leg, this gave us kind of, a pattern, kind of a wedge pattern. Yeah, you can see we had kind of a wedge pattern, although it's not a perfect wedge per se. It's not a perfect wedge because you can see this didn't touch the trend line, but it still gave us kind of a wedge pattern. And in this case, you can see that the second leg was higher than the first leg. So this is not exactly, the typical double leg that we are looking for. All right, this is not the typical double leg we're looking for. The double leg pullback we're looking for is the type where the second one is going to be slightly lower than the first leg. Okay, so in this kind of context, I think we had more of a bullish pennant pattern, and then we had a false breakout, and then we finally had a continuation in the direction of the original trend. But whatever the case may be, if you find a double leg pattern, where the second leg is a little bit lower or maybe around the same level, make sure you always get a bullish confirmation candlestick pattern before you jump into the trade. Okay, patience is key. All right, and one of the mistakes that some traders make is jumping in after the first leg. All right, that's too soon and you might get caught in the second leg against you. Another mistake is forcing the pattern where it does not exist. So if the market is choppy or maybe sideways or maybe the setup loses its reliability, like what we are seeing happening here, you can just stay out of the trade unless if maybe you want to trade another pattern. Okay, wait for both legs to clearly form and for the second leg to show signs of exhaustion before making your move. So now the two-legged pullback master setup is simple. Okay, it's pretty simple and it works across all markets and time frames. Learn to spot it, trade it with discipline, and avoid the common pitfalls that we discussed. If you find this guide helpful, hit the like button, subscribe to the channel for more price action strategies, turn on notifications so you don't miss the next video. See you in the next one. Stay tuned for more.